Thrift. T-R-I-V. Yeah. And searcher. Mic test. Mic test. Mic test. Mic test. Don, you want to start?
He is the MC for today.
Oh, you are
Julius.
Oh, Julius. Okay. Oh, I thought. Oh, yeah, you're speaking, huh?
Julius, you will be the MC right next time.
Oh, we can start. All right.
What a PowerPoint. Yeah. There you go.
Oh, is TC first or you first? TC. Yeah. 你要先. No. The plan is for him to go first.
Is it?
Yeah. That's in the agenda. oh, you want to say switch?
First?
That's okay.
English from here.
Yeah. That's okay. Yeah. Let her go first. All right.你先来. All right. Welcome everybody. Welcome to ETH Penang 2025 February event. Today we have two guest speakers, TC and Erika. So I don't want to spend a lot of time here. So let's start with TC. TC is one of the founders of ETH Penang. So I will keep it brief because he said he will introduce himself in his talk. So welcome, TC.
So hello everyone. So a very good evening to everyone. So today my topic will be the tech behind ETH scaling. So in this topic, I'll be going through how the underlying ETH actually works and how they actually functions. So let's start. So these are the table of the contents. So basically to give the audience an overview to how the presentation structure looks like from what is zero knowledge proof all the way to the applications of ETH. So let's start with what is zero knowledge proof. So it's actually a technique that allows a prover to prove something without revealing any information regarding what the user is trying to prove. Just a basic definition overview. So basically, there are two variations of zero knowledge proof. The first one is interactive, and then the second is non-interactive. So the interactive actually requires the constant interaction between the prover and verifier, meaning that there might be multiple rounds involved in the proving process. And it's very secure as the challenge involves randomness. And it's more easy to implement as it's more straightforward. But it's not that practical because it will require multiple rounds. And then in a setting where the prover and verifier it's like on a constant connection, it's not that practical. And then what we have here is like mostly used in the industry, which is what used in ETH is non-interactive proof. So it's actually the prover creating a proof that can be verified by the verifier without any interaction. And then it requires only one single round. So meaning that everything, the verification process will goes in one round. And then the proof is typically a highly compressed representation of the knowledge. And it's harder and require more careful implementation due to its higher complexity, meaning that it's more difficult to implement. So I will give an intuition behind the interactive proof. So imagine that Alice is standing in front of a big magical maze and Bob stands near the hidden door with passcode. So Alice randomly tells Bob which route A or B to return. So actually, Bob can convince Alice if he knows the passcode without revealing it by always returning from the right path. The chance of being correct for n independent attempts is like 1/2 power by n. So it means that the probability of guessing correctly is every time is around 1 in 1 billion for 30 attempts. So this actually makes it mathematically safe if you've done it in enough attempts. So it's impossible to cheat every time and get it correct every time. And then moving on next, there's an intuition behind the interactive proof. So given a scenario that you are looking at the page from a book, which is known as Find Waddle, and you have found Waddle. But you wanted to prove to your friend that you know where Waddle is and without revealing where he is on the page. So you could take a large piece of black paper bigger than the book itself, and then you cut a hole in the middle of the paper. You then place the paper so that it lines up perfectly, so only Waddle face is visible through the hole. Then you will remove the black paper from the book. So this actually makes it possible that you can still locate Waddle, but you will not reveal his exact location or anything else on the page. So basically, this can be done in only one run. So there's no need for constant communication. And then we'll provide an overview to what zero-knowledge proof is. So those are the 4 core properties of zero-knowledge proof. So the first one is zero knowledge, as you know. It's in the name itself. So you can prove that you know something without sharing what it is. And it's a sin. The proof is more and fast to check. It's non-interactive, no back and forth communication needed to prove it, and argument of knowledge. So you must actually know something. You have to know the secret to prove it. So any questions so far? Okay. So these are the explanation terms before I go deep into the operations of how GK EVM works, because it actually involves some mathematics as well as some complex terms as well. So just give the audience an overview to the terms that will be used here. So the first one is witness. So it's the proof data that verifies the correctness of a computation. And toxic waste is a secret information created when setting up the GKP system. So this has to be deleted once the GKP system has been set up. And the circuit is a mathematical model that represents the step for performing a computation and polynomial commitment, which sounds a bit mathematical, but it's actually a cryptographic method to prove the validity of polynomial without revealing it. So let's move on to the next slide. So let's start with what are constraints. So constraints actually defines the rules that computation must satisfy to be considered valid. So it's very commonly used in circuit arithmetization. So we will be discussing this and provide a deeper overview for the next slides. So just mentioning first. And then suppose a transaction in the GK rollup perform the operation 5 + 5 = 10, which is a basic addition. A constraint in GK snark form will look like this, and then it's like an equation that will satisfy the A + B - C = 0. So if you plug in these numbers, you will get exactly the number 0. And constraint like this actually allow verification of GK proof without having to execute the entire computations. So this will be more technical, but it's basically how the arithmetization works behind GK EVM. So as you can see, this is an arithmetization table, and then the circuits are presented in the form of this type of table. So, and each row actually represents a step in the computations. So like a gate in the circuit. And each column represents something specific. So the columns for input and outputs actually holds the value like the numbers going in and out for each gate. And the columns for constraint. So this holds the rules that I mentioned on the previous slide, which is what the A + B - C = 0. So these rules are known as polynomials, so they can be converted into polynomials. So for further information, polynomials is actually just a specific type of algebraic representations. And the polynomials are then combined into one big equations that cover all rows of the table using interpolation technique. So interpolation is a mathematical technique that's able to combine all the constraints into a single equation, meaning that we just need a single equation to represent all the constraints. And this is powerful because a single equation can represent everything, so represent a single proof. And then Plonk then use additional metric like commitment to prove that all constraints are correct without revealing the actual values in the table. Let's move on to what is a commitment scheme, KJG example. So KJG commitment scheme is a type of commitment scheme that utilizes elliptic curve cryptography. So elliptic curve cryptography is like, let's give an example. So given a point, if you try to map it onto another point in a mathematical equation that represents a curve, so it's very difficult to compute back the original point because the curve is very complex. And then let's explain this scheme with a secret recipe example. So the prover will first log their secret recipe in a sealed envelope, which known as the commitment, and send it to the verifier. So the verifier will pick an ingredient and ask, is this really in your recipe? Prover will take the sealed envelope and split it in a smart way known as quantum polynomial and use it to build a special stamp. So prover will then send back 2 items only. The actual ingredient itself, which is the commitment, and then a special stamp, the parameters that actually satisfy the quantum polynomial. So this allows the prover to prove they have the real recipe without revealing the whole thing. So right now I will stop. Any questions on this? So I shall proceed. Okay. So in here I will give a comparison between GK-Snark and GK-Stack. So GK-Stack is actually a variation of GK-Snark. So it's built on top of GK-Snark underlying technology. So these are the core features and then their core differences. So for the GK-Snark, it actually requires a trusted setup, meaning that you need to depend on certain party to actually work. For GK-Stack, you don't need a trusted setup. So there's no risk of toxic waste. So the toxic waste is what we explained for the previous 2 slides. It's a secret number that we'll be removing it after we set up the GKP system. It's used for the randomness purpose to increase security. And then the cryptographic property for GK-Snark is using pairing-based cryptography like elliptic curve, and then GK-Stack use hash functions. So for the proof generation, GK-Snark has smaller proof, but it increased bottleneck on less data set because you need repeated computation for that. And GK-Stack have larger proofs but less bottleneck, is able to compress the proofs more effectively than GK-Snark. For GK-Snark, one of the advantages is that the verification time is faster compared to GK-Stack. And then the polynomial evaluation for GK-Snark, it involves select random points to evaluate the polynomial. And for GK-Stack, is recursively interpolate a new polynomial of lower degree. And then for one of the key highlights for GK-Snark and GK-Stack is that GK-Snark is not quantum safe because it's relying on elliptic-based cryptography. So as we know in the world of cryptography, for the elliptic curve cryptography, it's not entirely quantum safe right now, meaning that probably in the future 2 to 3 years, or after quantum computing developed, so it might affect the security of the GK-Snark itself. And GK-Stack is most likely to be quantum safe and it's not using pairing-based cryptography, it's using hashing. Okay. Moving on to the next slide. So what is a GK EVM? So it's a virtual machine that acts like standard EVM that runs the computation off-chain. So this is a simple definition on what GK EVM is. So this is a basic architecture of how GK EVM actually works. So there are two layers here, which is the Ethereum-based layer itself and the layer 2. So this is a basic architecture. And then it starts from the sequencer will retrieve a batch of transactions from the L2 mempool. Sequencer then submits the transaction data through the relayer to the ROA contract on the Ethereum network. Sequencer also generates an execution trace and send it to the coordinator. So the coordinator will randomly pick a roller. So the roller has GK EVM within it that is able to generate a validity proof for each block trace. So the roller executing the GK EVM will take the world pre-state, the post-state, and transaction information as input. So basically the GK EVM will take all those input and then it will generate an output for that. And then this compared to the execution trace of the EVM. So to ensure that what has been executed in the EVM and all the constraints are equivalent to what will be produced from the EVM as well. Basically, a similar environment to how computations are being executed in both EVMs and GK EVM. So they will be the same to ensure the same output. So the results are then compared with the execution trace to ensure correctness. GK EVM will unroll the execution trace, and then the trace will be constrained by arithmetic circuit in the form of Plonkish arithmetization table as polynomials. And then as we mentioned, the polynomial commitment scheme like KZG will be applied to the polynomials. The roller construct the snap proof from the witness that bind to the constraint are defined in the arithmetic circuit. So the roller will send the generated snap proof and the coordinator assign an aggregation task to combine all the proof because there might be multiple transactions and then multiple steps for computations and then we need to verify one of them. But in the final phase, we'll still need to compress it into a final proof so that the verifier is able to verify it more effectively. So the single block proof is then sent back to the coordinator, and the coordinator finally is submit the proof and commitment to the verifier contract through the relayer for final verification. So this will be how the GK EVM works from 0 to the last step, to the verification step. So let's move on to why is GK EVM used. So the first thing is it directly inherits multiple aspects from Ethereum network. So you have multiple advantages you get from inheriting from Ethereum, which you don't need to rely on other network to do so. The first one is data availability, also more efficient proof verification, resolution disputation, and transaction settlement. And then for the second part, I think it's more friendly to most people working in the tech industry, which is more relevant to GK rollup. So it's fully compatible with Ethereum tooling. So it means that you can use the same tooling as usual, and then you don't need to change a lot of your tooling. A lot of code have been written on Ethereum can be reused in GK EVM as well. So it actually saves time and resources. And it also provides a more efficient proof generation and verification process. So it actually opens possibility to let users leverage advanced cryptography and powerful hardwares to do the proof generation and verification. We actually increase the efficiency itself. So these are the types of GK EVMs. So I will not go deep into it, but just to provide a basic overview. So as we know, there are multiple variations of GK EVM on the market right now, and then each of them serve a different purpose, although they each come with their own advantage or downsides. So basically, these are all the GK EVMs right now that can be categorized into 5 types. And then these are all their features. So moving on to the last part, which is the application of GK EVM itself. So the first thing, which is the most important one, GK EVM actually enshrines the blockchain itself. So it minimizes the validation computation, and then it reduces the storage and transmission needs. And then this in turn also actually enhances the scalability and privacy. Because user is also able to prove the information without revealing them. This actually helps protect privacy. And then you also work in detecting smart contract bugs. So you can actually identify the state root alteration without exposing the details of the smart contract itself. You know that if someone actually tamper with the code in the smart contracts without seeing the smart contract itself. And then this helps prevent double spending and replay attacks, which means that this prevents people from spending your funds in the smart contracts, and then it actually improves security on that part. And for the last one is data attestation. So as we know, for blockchains to obtain information regarding the outside world and environment, we will need something known as an oracle. So an oracle is basically a protocol to get the real-time data from certain environment or from the overall environment, and then it actually pass it inside into the blockchain. But before this, we might be concerned that oracle data might be leaked and then might be used in a bad way. But with the application of this proof, so we are able to verify the oracle data, but without revealing the oracle data itself. So this actually helps protect sensitive oracle informations. Like user, they didn't want someone to access their balance and then what their transactions, what their recent transactions are. So that's the end of my presentation. So Q&A sessions. So any questions so far? Questions, anyone? So if not, I will pass my mic to Eric. You have questions, right? Julius? No, I thought you have questions. Oh, I see. Okay, okay. So I will pass my mic to Erika. Okay. Oh, roller, right? This one. This one, right?
Machine right now today.
It's more complicated than that. This is an overview.
Yeah, but I think it was like well put together as well. The overview here, so the way that we laid out the architecture, then there'll be like 3 layers, right? Ethereum's base layer itself will be the settlement layer. And then afterwards, we'll have what we call the sequencing layer, and then afterwards by the approval layer, where we're touching on the coordinator and then assigning all of these prover tasks. The roller 1, roller 2, roller 3, these are all provers. And then these provers are tasked with executing and creating the proof. So yeah, they are actually like big beefy machines. So it's no lie that today the protocol itself is running on a lot of like off-chain mechanism, but where we come in on-chain and then we're also in L2 is that we're inheriting the security and decentralization properties of Ethereum, and then we post the data onto like Ethereum itself. Yeah.
So this is run by Scroll yourself or is external party as well?
We've got like external parties for the approvers. Sindri is one of them, and then of course like there are a couple more. Yeah.
All right, thank you.
Yeah, of course. I'm more than happy to.
This is like an overview architecture presentation or I'm missing out something very essential here.
Definitely very detailed, and you gave it's a very broad topic. I think you did a very good job to also like outline each and every one of them. Yeah. Good job to you, man.
Thank you. Thank you, TC. Any questions? Anyone? You have questions? No?
Okay, so zero knowledge proof sounds great, right? So we can take people's data and hide it, which is good, right? Unfortunately, I'm a lawyer, and every single structure out there, every bank, everything, they want to know who people are. They don't like this at all. So, for example, anybody here who's gone to China recently, China, everybody says, is very modern and exciting because you don't have to use cash anymore. But I refuse, obviously, to not use cash. Cash is king, guys, because the moment you pay by Alipay or Touch and Go or whatever, they know what you're buying. They know you bought that book that complains about, I don't know, the government or something, right? They know all the pornography you're buying, everything, okay? And do we want that? No, we want zero knowledge proof, but the government, the banks, they cannot allow it. So what are you doing about that?
So first thing is, I'd like to touch on the topic of zero knowledge a little bit. The technology itself offers two aspects, right? There's the privacy aspect and then also the scalability aspect. So what was discussed over there was touching on the succinctness of generating a proof for scalability. Not to be confused with touching on the privacy aspect. There was nothing in there which was touching upon privacy as well. And I would like to also give credit to TC there. Nothing was mentioned about privacy. That is a functionality that it enables, but right now, I believe what you're saying as well. It's not well received. It's more about scalability because by generating a proof, you're able to create what we call a derivation pipeline. So this derivation pipeline allows us to reconstruct the ledger, right? So by having the succinctness, by having that concise data that's already posted onto Ethereum, anyone who actually reads the data off of Ethereum L1 itself, they're able to reconstruct the entire state through using zero knowledge proofs. Yeah, nothing to do about hiding any data. Everything is still permissible and transparent.
Could I say something like zero knowledge proof allows only certain people or entities to know everything? So it's actually even more vicious and better for dictatorships and evil governments because basically I'm just a company, right? I shouldn't know. I'm just a company. I don't have the right to know. I'm just selling Nike shoes, right? So I don't need to know all this information about you. So that obviously you're not going to let me see it. And zero knowledge proof will allow that transaction to go through very quickly. Excellent. He buys his shoes. I know that I've sold a pair of shoes. That's all we need to know. But the government can still know everything.
If the government needs to know, I feel like they would already know. You know, I feel like that's my take over there.
Yeah.
And but truthfully, like at the end of the day, I feel like this technology itself, it opens up like different avenues, right? Like all technology, they come across neutral.
Yes.
Right, so I'm just going to like put it up front here. If let's say, well, we've manufactured guns, pistols, cannons, all of these things, they're all out there, right? So it depends on the actors who are actually using it, if you're using it in a malicious fashion or not. Right. So in this case, I would say that it all comes down to the user, and the technology is out there for us to use. And how we chose to use it is by scaling Ethereum. And what does scaling enable? So think about like Visa or MasterCard, right? Like 40,000 transactions per second is what it claims to enable. But everything is all happening behind closed source fashions. And then like companies like Visa and MasterCard, they are monopolizing the market over here, right? Now, we want to create like an open source world where everyone is able to like tap into this economy like fairly. And this is where blockchain enables this kind of system. But right now, Ethereum itself is hindered by its scalability. And because we know that it went for decentralization and security property, which is fantastic, right? Retailers access, everyone comes in here, use it, fantastic. But there is also an aspect that there's going to be a lot of demand coming in, a lot of users, they will want to use this, consumer would love to be onboarded with NFTs, gamings, and stuff like that. So ultimately, there is a need to scale.
Got it. So really, zero knowledge proof is just scaling. It's just what DeepSeek did to AI, basically, is what you're trying to do. So what DeepSeek did to OpenAI. Meaning, if you think about it, the OpenAI, the problem with it is it has like server farms outside of San Francisco, just carpeting the ocean there. Like it's ludicrous. I don't know if you've been to visit, but you can go and visit the server farms and the pot. And you can just see it, and you're just like, somebody could just drop a bomb here and the whole thing collapses. Whereas DeepSeek, of course, are like, we need one computer out in like Xinjiang. Right? That was the idea.
I think there are some commonality of it.
Yeah. But that's the idea.
For zero knowledge proofs,
Yeah.
like an upgrade of like OpenAI versus like DeepSeek.
No, but DeepSeek really disrupted OpenAI because it can do the same thing as OpenAI with their...
in terms of transaction, yeah.
Yeah.
Because DeepSeek is cheaper to build.
Exactly. So you guys are just trying to make it cheaper, faster, better,
Yeah, cheaper and faster
to
alternative.
disrupt sort of the existing way of doing business.
You can say that. Yeah.
Okay, that's what I would push.
Here we go.
Thank you, TC. All right, we have our next speaker, Erika. So I have quite a lengthy introduction for Erika here. So I plan to cover all. Erika Investortil, I hope I pronounced the name correctly, is the CIO, COO, GC, and sometimes a compliance officer at Centrium Advisory Services Limited, where she helps clients structure companies, investments, and portfolio effectively. Right? She focuses on governance, licensing, and procedures to support business growth and market expansion while maintaining internal controls. So with expertise in private equity, M&A, and fund transactions, she structures investment to mitigate regulatory compliance and legal risks. So her extensive experience is in Asia, especially China and India, enables her to identify challenges affecting returns. Previously, she worked in capital markets law. All right, I'll skip that. So welcome, Erika.
Hello? Is this better? We couldn't really hear you. So you were speaking, but it was taking your voice and
Oh,
making
right.
it rah,
I see,
rah,
I see,
rah,
I see.
rah. So I was like, oh my God, we have to stop this. So hi, everyone. I'm Erika. All you need to know is that I started out as a lawyer. Well, that's not even true. I started out as an archaeologist in China. I'm fluent in Mandarin. I lived in China for 16 years doing archaeology and history, became a professor, said, what the hell am I doing with my life? I need to make money, and went back to law school, became a lawyer for a hedge fund. And then a friend of mine, her husband, came to her in 2016 and said, I want to do an ICO. And I had been a capital markets lawyer. So I was like, I don't know that you can do, is that legal? And so that's it. We did a huge ICO, made lots of money, you can imagine, back in the day. And then I said, screw this, and stopped being the general counsel of a hedge fund and started Centrium Advisory to help other startups do similar things. At that time, it was the ICO craze. And obviously, as part of it, we were all lawyers, but we wanted to be different from your typical normal lawyer that is very, very narrow, just looking at what the law says. And lawyers are incredibly risk adverse. They don't want you to do anything at all from day one ever that violates any law or regulation anywhere. So if you ask them, can I do this? Their answer will always be no. No, no, no. And that's no fun. Because if then startups have one of two reactions. One, they listen to the lawyer, and then they never go anywhere because they're always trying to make the lawyer happy. Or, is it too loud? What's happening? Okay. Or they just give up and never talk to lawyers again because lawyers suck and they're assholes and we don't want to talk to them anymore. And that's not helpful either, because eventually you do need to actually listen to lawyers, eventually. So what we wanted to do was start up as a way to help startups do what they can. They do not have to be fully legal. You do not have to follow every regulation. No, you do not. There are certain ones you have to, and you better, from the beginning. But other ones you can just let it go by the wayside. And so we were here to help people figure out which laws and regulations are really like fundamental and which ones we're going to ignore for now until you get some money. And once you get some money, you can hire your own lawyer, your own CFO, your own accountant. All those people cost a lot of money, okay? So you can't hire them from the beginning. It's just you in your mother's basement, in your underwear, trying desperately to get this goddamn company off the ground. You're not supposed to be thinking about any of these legal and regulatory issues. Let me do that for you. So that's what Centrium does. We have some spectacular failures. I started FTX. Not my fault. Alameda. Actually, I started Alameda and then FTX. Three Arrows. Sorry. I did testify against Sam Bankman-Fried. I put him in jail because there's one thing I cannot abide. I can agree with you that you can violate rules and regulations and laws, but you have to be doing it for good reason. Okay, it has to be because you're strapped for money but still at the base of everything that you're doing, you're protecting the customer or the client or the whatever it is that you're doing, right? That you're not defrauding. Now, I trusted Sam, and Sam said in that courtroom right in front of me, not looking at me in the eye, because I was in that fucking courtroom, and he said, oh, I didn't know you couldn't commingle company funds. And then I was able to show recordings as well as computer stamped data to show that I had given him full training on company accountancy and how you can't commingle company funds. Okay, so that was it. That's he went to jail for 25 years. I hope to God Trump fucker doesn't pardon him, but I suspect he will, unfortunately. So today, I don't know if any of you guys really care about this, and if you don't, we can just rush through it. We can just have conversations. But what I wanted to talk to you guys about, or ask you to talk to your friends about, is a lot of the things that I see that startups do wrong, which stop them from actually being able to raise money. Okay? And getting that angel round is probably just your mom and dad, whatever. But getting that seed round and then jumping from seed into series A, B, and C, that's a big transition, especially from angel to seed. And a lot of people fail at that transition. Dun, 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 dun. Not because their company isn't awesome. Not because their idea isn't awesome. In fact, they have everything in place, but they still fail. And so I just wanted to explain a little bit about why companies fail despite having everything going for them in the eyes of the investor. So this whole thing is, imagine an investor is looking at you. And what do they want to see? What do you guys think? If I'm an investor and I'm looking at you, what do you think I want to see? Sorry? Returns. I love it. Trustworthiness, returns. No. What? Great. Great idea. Great. Oh, grit. Getting closer. Grit. I like grit. Sorry? Again, grit is better than capable, and I guess I'll just explain why. So what we're looking for is evidence of execution, the ability to execute on your plan. That's what I mean by grit. I don't need to see you working from 9 to midnight every day, blah, blah, like, and you never see your kids or whatever. That's not what we're talking about. But we are talking about evidence of your ability to execute. And I don't even, like, depending on where you are in your process, you may not have returns yet. So I'm not going to look for them. I don't care, right? You may not have a product yet, okay? And then I'm not going to look for it. But I want to see, of course, the business plan, and I want to see it all laid out, and I want, you know, some detailed, concrete steps that I can look over and be like, have you done it? Oh, look at that. He's doing it. Isn't that awesome? Okay, so it's that evidence of execution ability that this entire thing is based on. Now, you guys, when I say money is not fungible, you're like, oh, yes, it is. No, it's not. You really don't want to take any investor's money. You might feel like you should, like, oh, somebody's finally willing to give me $500,000. I should just take it. No, do not do that, because you need to know whether you and this investor's ideas are aligned. If that investor has a misapprehension, doesn't understand what you're doing, don't take the money. All you're going to do is have trouble. Now, has anybody here had investors that have given them trouble before? Do you know what kind of trouble I'm talking about? Any ideas? Sorry, say again? Oh, well, if anybody, but any ideas, like, what do I mean, like, bad investors? They're just money bags. What could they do to you? Yep, they want you to change your business plan. They expect aggressive actions that doesn't really fit within your business plan or what you're trying to do, okay? We should be out there doing privacy. No, I'm not doing privacy, I'm doing scalability. Fuck you, I gave you $500,000, you gotta listen to me now. What are you gonna do? Money talks, right? So you don't want my money if all I ever talk about is privacy in front of you, or if I don't listen to you, right? You've really got to be careful. That's why I love starting arguments with people, because I can be a real bitch. And all I want you to understand is those investors out there, they think they own you because they gave you a little bit of money. And so when I say money is not fungible, I mean you really need to make sure that you see eye to eye with your investors before you take their money. It's not worth it otherwise. Yeah, I've seen some terrible things. Yeah, so business ready, right? You guys are thinking about your business plans, you're thinking about your budgets, you're thinking maybe about your cap tables. Actually, I've learned very, very early on that people don't even know what a cap table is. So one of the first things I urge you to do is go to Y Combinator. It's online, Y Combinator, and just do one of their online courses on what is a cap table. Because one of the biggest things that I see nowadays, I don't know why, I don't know if it's just the people who have come across my desk, maybe, but they are giving away too much in equity. And you shouldn't be doing that at an early, depending on what stage you are, right? So I see people giving 10 to 15% in equity, and I'm like, what are you doing? Give them one share. I'm really mean to investors. I am also an investor myself, so I know how to screw you from being an investor and having screwed them. So if I'm your lawyer, I'm going to be trying to protect you from those evil investors. Trust me, evil bastards. Anyway, so here, if you look, it says investor ready. When I look at you and I evaluate you, do I want to work with this person? I need to see whether or not you have all this stupid stuff. Like, let's be honest, you guys. Is this stuff important? A 2-page flyer, a marketing deck, okay, term sheets, website, social media, a logo. This is all, isn't this all froth? Isn't this all just clothing? Whereas the important stuff is inside your heart, is your business plan. No, this is what investors want to see. Why? Any ideas, why do we want to see this? One, it shows that you're executing, but why do you think we want to see this stupid paraphernalia? Why do people have to wear shirts and ties and a stupid suit in a corporate office? Exactly, to show that you're willing to play the game and you know what the game is. So if I show up at Goldman Sachs as a man wearing like what you guys are wearing right here, you're going to get drop kicked out and Goldman Sachs will not hire you. Okay, but you might be the smartest person in the world, guys. So smart, but Goldman Sachs still won't hire you because you don't look the part. It's not because, oh, they want you all to look a certain way. They want you to be willing to play their game. And so having this is like wearing a suit and tie, all right? You're just showing that you're willing to play the game. One of the biggest investors that I've ever worked with, who's invested, millions and millions, he said to me, and you're going to hate this. You ready for this? You're going to hate it especially because he's really into integrity. He said, it's better to look good than be good. It's better to look the part than be the part. Once I've given you the $500,000 and it turns out that your business plan, which looked great, isn't going to work for some reason, there's a change in the marketplace or whatever. Do you know how many metaverse projects I've done? And now nobody's even heard of the fucking metaverse. Okay, right? So I'm helping a client right now who's supposed to be issuing a metaverse token. There is no metaverse. Nobody cares about metaverses. But now we're all talking about AI agents. So they're just taking the SAFT and they're like, all right, we'll issue that stupid metaverse token. And for each metaverse token that we're giving to our investors, who gave us millions of dollars, $12 million in this case, we're going to give them this other AI agent token, which is going to make them a lot of money. And that will satisfy them. So we're going to issue a stupid, like we're supposed to, a metaverse token, but it doesn't matter in the end because we're giving them something else, so they won't sue us. Anyway, so the idea being that if you look good and you're showing that you're willing to play the game, and unfortunately your business plan doesn't work out, or it has to be massively changed. You know, as an investor, I don't really care about that. I wasn't wedded to your business plan. I was wedded to you as being an executor and somebody who was trying to do something interesting and innovative. And maybe you just have to change it. And that's totally fine. So, you know, that's what I'm trying to convey here. That being successful in your chosen whatever is actually, from an investor's point of view, we don't care. Now, due diligence, again, this is all about putting on a suit and looking good, okay? So when people, I'm gonna ask you for your company's certificate of incorporation. I'm the investor. I said, oh, I'm doing some due diligence on you. I'd like to see your company's certificate of incorporation. This email comes into your inbox. You know I'm going to give you $12 million. So you're like, okay, what are you going to do next? Do you know what your company's certificate of incorporation is? Does anybody know what a certificate of incorporation is? One does. One does, okay? Some people literally don't, okay? So are you going to respond to me with the certificate of incorporation? When are you going to respond to me? You read it. Just not supposed to read it. Yes, you must respond within 12 hours. Why? It's the same as wearing a suit and tie. Why? It shows you know what you're doing, right? It shows, no, absolutely not. No, it shows that you knew what a certificate of incorporation was. You had it available. Do you know how many fucking clients of mine have lost their certificate? Do you know what the most important thing for a company is? It's your certificate of incorporation. And they've lost it. They don't know where it is in the folder. Okay? Now, I used to work for the SFC, the Securities and Futures Exchange or Commission, in Hong Kong. And we had a rule. If the people that we're trying to audit, right, because we're thinking that they're doing insider trading or whatever, if they don't respond to us within 12 hours, they go on a different list. And we're going to do a full audit on them. That's where that 12 hours comes from. That's the regulators thinking. If you cannot respond to me within 12 hours, now maybe you actually have lost your certificate of incorporation. Okay. You lost it because the company secretary that you used to incorporate your company burned down, okay? So you need to tell me within 12 hours with proof that the reason you don't have it is because the damn place burned down, okay? That would be fine. I would accept that as an answer. Of course, but I'm just saying, if like literally you've lost or it's corrupted or something, there's got to be some good reason. You've got to be able to spin the bad situation. Because if you don't come back within, 12 hours, I've worked for the SEC, the CFTC, the SFC, and the MAS, and all of them have the 12-hour rule. So we've all, of course, taken it. Now, I don't care about that. Oh, yeah, I kind of do, but I'll tell you about that later. All right. Did you all know that the entire corporate world, particularly investors, all we really care about is tax? Taxation is the most important thing. Why? Let me just give you a little rundown of some horrible things that can happen to you if you don't do the right taxation. And I'll bring this to Animoca. Why has Animoca not done their IPO yet? Because they're fucked. Why are they screwed? Because they raised money in Hong Kong. They have a Hong Kong company, they have an Australian company, they have a BVI company, they have a Cayman company. But everybody, this is before the political trouble, so everybody loved Hong Kong and thought that it was a place where the rule of law, blah, 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 we're all going to put our money into Hong Kong. Okay, so Hong Kong has this unfortunate thing called stamp duty. Every time I want to sell, so if I'm a shareholder in Animoca and I want to sell some shares to you, I have to pay a tax to the government of 0.025%. That's no money at all, right? That's nothing. Say I own 100 shares, fine. I can sell it to you. We actually split it between us, so you pay half, I pay half, it's fine, okay? You think that's no problem, right? Guess what? The Stamp Duty Office requires a full audit to be done to prove that those shares are the price that we are selling at. And guess how much a full audit of Animoca has cost them? They still haven't been able to do it. So no one has been able to sell those fucking shares on the secondary market for 5 years now, because they still haven't been able to complete the audit. They finally completed 2019. Why? Because the audit firm that they're using doesn't believe in crypto. It's a long, horrible, complicated story that has nothing to do with Animoca. But the point is, that's frozen all those shares. They haven't been able to sell those shares. So what the stupid thing that they did was raise money at the Hong Kong level. Also, I don't know if you know this, but if a Hong Kong company has more than 50 shareholders, and Animoca was a $5 billion company, so yes, it had more than 50 shareholders. If you have more than 50 shareholders, you become a public company. Not listed, but a public company. But the rules of a public company are exactly the same as the rules that apply to a publicly listed company. Do you know how expensive it is to be a listed company? It's very, very expensive. And so all of a sudden, they got to like 48 shareholders, and somebody said, hang on, we can't be raising any more money. I'm like, nuh-uh. And so then I had to do this whole stupid BVI structure where all the other investors went into BVI, and then the BVI only shows up as one investor on the Hong Kong. Okay, so this kind of complexity is something that people always forget and they don't know about. And it's not your job to know. But do not raise money without speaking to somebody about the taxation situation in your country and whether or not it's really going to just destroy all of your plans. So we do think now that Animoca, as you may know, has agreed to work with the Hong Kong government to create the stablecoin, so the e-Hong Kong dollar, that all of a sudden, hopefully they'll be able to change their auditor and do a bunch of other things that they need to do to get that IPO going, which would be great because I'm a huge investor in Animoca and I want my money back, but really badly. But can you imagine that it's just tax? It's just tax that has been a thorn in these guys' side, okay? So when you are structuring your company, it's not simple like just let's create a company. You need to actually know all of these answers before you start your company. Actually, you don't, but you need to ask somebody about it. I don't care about any of this. Okay. Another thing that I need to emphasize is, again, being compliant. Nobody cares that you are compliant. Okay. The stupid regulators care. They're paid to care. Nobody cares that you're compliant for just the sake of being compliant, all right? What they want to see, again, is are you willing to put on the tie and to put on the suit jacket and to play the game? So when I as an investor ask you, do you have your license? What's your answer? You do not have your license, okay? Let's just say, and I say to you, okay, you want to do money transmission. Do you have your money transmission license? What's your answer? Within 12 hours. No, never lie. Never, ever, ever, ever lie to anybody. That's a criminal offense and you will go to jail. I mean, it's true. That's a lot of people have that instinct. Just, I'm getting it next week. I'll lie this week. Don't lie, guys. Just don't do it. I'm giving you money at the angel round. I know you don't have your fucking license. I'm asking you that question because I want to see if you're going to lie to me. By the way, I can check online whether or not you have the license. If you're a lawyer, this is easy. You guys may not know where to go and look, but I know where to go and look. That when I was a baby lawyer, that's all I did every day. So don't ever lie. What you want to say is, no, we do not have that license. However, we are preparing, listen to how good I sound. We are preparing to apply for that license by Q3 2025. Or even better yet, in order to get that license, we need 2 years of operational activities, and we only have 1 year. So we have to wait another year before we can begin the application process. I'm literally licking your feet and shoving money into your shorts, okay? Like, I would be so happy if somebody said that to me. Never, ever lie. Just explain what's going on. And then you sound like, I don't know, a professor or something, like, wow, I'm very impressed, okay? And it is the same, I'll just go back a little bit. It is the same with money controls. I don't know if you guys actually deal with money, but that was such a big issue in FTX. What happened was Caroline Ellison, bitch that she is, sorry, I lost all my money in FTX, all of it. Millions and millions of dollars, okay? Gone. My company, gone. We came this close to bankruptcy. So yeah, she's a bitch. So what she was doing was, oh, sorry, wrong way. She was lying about the money controls. Obviously, she says directed by Sam and Gary Wong. I don't think that's true, but whatever. Anyway, so when an investor asks you, what are your money controls? And it's literally just one guy who has the 2FA for the bank account, and there's no second person, just him. Again, don't lie about it. You need to be honest and say, well, actually, he has all the money right now. And the investor's going to come back and say, well, what do you plan to do about that before I give you money? Right? I'm not going to give him all my money. At least you and he, 2 people, okay, you might run away with the money, but the more people like you, all of you can watch the account and monitor the account and get messages when somebody moves money in the account, the better I'm going to feel. So that is actually quite important. Now, what I want you guys to do is, I have all sorts of other stuff. You might think that what I've said, there's so many ideas, okay? All right, so I've got 2 of these things. You guys should take a picture. And this will make you look like a god among men, okay? And what it is you're never going to show this to the investor, but it's just a way for me to give you 26 things that, and it doesn't have to be pretty or anything, but you should have an answer or some response for all 26 of these things that you change every time, not every, like maybe once a quarter, maybe you revisit it once a year, but so that if you're ever in front on a Zoom meeting in front of the investor, then if they say to you, who are your competitors? Boom, boom, boom. Like literally nothing pretty here, guys, just dots. These are our competitors. These are who we see are our competitors. And my response to you will be, well, but that's like, how can your competitor be some famous company that we've all heard of and I've never heard of you? And then you have an answer to that. Like, obviously, in order to put down that competitor, well, we think they're competitors of ours because we're going to disrupt their industry and we're going to do what they do better, faster, whatever, than they're doing it now. And here's a chart. Here's a chart. You throw up a chart. Here's a chart of how we're going to do it better than our competitors. My God, you're going to look great. All right. So this little booklet here, literally, I used to have to, so I was in charge of investor relations for my fund. So my fund was a $16 billion US fund headquartered in Minnetonka, Minnesota, which has got 3 people and a dog living there. But Minnetonka, that's where it was. And $16 billion. And our investors were people you've heard of, okay? Like very important, famous people. And I had to go in front of them and be absolutely like grilled. And so I had this is where this comes from. So I literally, it's created like a notebook because I literally had a notebook, like one of those things where you can slip in the pages. So if I needed to change it, I could slip it in, and with tabs, okay, with tabs. And they'd be like, so Erika, I don't know, you know, who is your accountant and who does your regulatory reporting in the Cayman Islands and the BVI? And I just be like, flip, right in front of them, flip. Our, you know, accountant is PwC, our regulator, we're using so-and-so and so-and-so in the Cayman Islands. And that actually was a huge problem for us, because guess what happened to the people who were doing the reporting for us in the Cayman Islands? One of them, like, took all the funds from a Cayman Islands bank and ran away with it. Literally, the director of one of our entities that we had hired to be a nominee director, I don't know if you know this, but you can hire other people to act as directors for your companies. And we had hired him because he lives in the Cayman Islands, and we don't. Nobody wants to live in the Cayman Islands. Horrible place. And he had run away, not with our money, but with the money of this Cayman Islands bank. And suddenly, I had to change. You can imagine, right? In that notebook, I had to be like, yes, we are aware of what happened, and we are in the middle of changing that director, and we have the following mitigation in place to make sure that he can't come back in the time that it takes us to change the director. He can't come and steal all of our money. You know, we're in the process of taking his name off the bank accounts. We're in the process of doing. I had to have all of that because my investors went crazy when they heard that. How could we have a director who ran away with, like, literally $30 million from a bank? So I think that's probably the most helpful for you guys. I don't think if any of you run a fund, I can also send this to you. But obviously, whatever your company is, you're going to slip in, you know, if we're talking about zero-knowledge proof, you might want to slip in something about the actual business that you're doing. This doesn't include that. It's only the around the business stuff that an investor wants to hear that you know, or at least you know you should have an answer to it. Even if it's not a very good answer, it doesn't matter. At least you know. As opposed to the blank look. The worst thing for us is the blank look when I say, well, I was at ETH, was it ETH? No, WOW, Bangkok, WOW. And there are these, you know, guys who are doing online or Telegram gambling, right? And I was like, oh, so what are the regulations? Like, do you have a license to do that? And they just had this blank look, like, what license? I'm like, you do realize it's fully illegal, like criminally what you're doing. But I couldn't say that in front of everybody, but just seeing that meant they didn't even get a single vote from the audience, because all I needed to do was ask that question, and the blank look just answers it all. Even if they had come back, I'm willing to do gambling. I'm interested. Let's see how, if you came back and said, well, yes, we do need 6 licenses from every single country that we do business in. However, at this point, we don't have any of those licenses. It's just a test environment. We're arguing that it's just a test environment, and that everybody's just working to help us see whether or not, you know, this is going to work or not. And once we have figured out that it's going to work, and yes, people will be making money and gambling and all that, and we will be taking our cut while we're testing it. But once we've tested it, we will go live with all of these licenses. And I immediately know I'm going to give you money, because you know that you need to make money with your highly illegal, non-regulated company in order to pay for all those licenses. Some of those licenses for gambling cost $350,000 US. Like, you don't have that kind of money now. Of course you can't now. But if you're just doing a test environment, we did so many test environments. Like Animoca started as a test environment. Kraken started as a test environment. Binance, I started Binance, started as a test environment. And we just did what we could, worked it out. Things crashed, horrible things happened. We got hacked. $30 million, I remember that very, very well. You know, terrible things happened, but whatever, it was just a test environment. Do you understand? So I was perfectly willing to help them, because they were literally trying, and this brings it back, brings it to an end, is that they were trying, CZ was trying to make money, but also he did not commingle funds. Okay? He did work with Putin, Vladimir Putin. Oops, right? Yes, and that's why he went to jail. He went to jail for 4 months. 4 months, guys. He's worth $80 billion. Would you go to jail in Seattle, in a white-collar jail, where he did a lot of working out and went to the gym every day, and he looks really good now. And like, for some reason, his hair grew back in really nicely. Like, I don't know what happened. Jail was good for CZ, okay? So I would work with him because even though he might be violating certain rules, he's not taking money from the client. He's just trying to do a new business in a very uncertain business environment. He's trying to protect people in whatever way that he can, okay? And eventually, as you can see, Binance is now really boring, and it doesn't make as much money anymore, but that's fine. It's much more reliable now, and I have my money on Binance, what little money I have left. But the idea being that, you know, CZ had to step down. He can do something else now, and they have like 80 lawyers working for the company now. So, you know, they're probably way more trustworthy, but at the same time, having been burned by FTX, I can tell you that, you know, the most important thing, obviously, from an investor's point of view, is that even if you cannot do it yet, you have a plan to protect whatever it is that you're trying to do, whether it be a client or, you know, if you want token purchaser or whatever it is, okay? And obviously, that's going to be why they're asking you, do you have that license? Because they don't want liars. Instead, they want, okay, I see you. I see that you can't do it yet. That's fine. Just eventually. Okay, so there's lots and lots more that we can talk about. But thank you for listening to me. And does anybody have any questions?
Love this, Erika. This was very unfiltered. And I have a question. So you've worked with FTX and also Terra Luna before, you mentioned early on. So in retrospect, if you could point out what were the red flags very early on for them, if you were trying to like recollect how it was when you first started working with them, what would be some of the red flags that you have identified like early on?
You're not going to like the answer. Because the thing that I didn't mention is that Centrium's business plan is I start you out, and then eventually I help you hire your general counsel, your COO, your CFO, etc. So I helped Sam hire Gary and all those people. And he used, you know, obviously, I did not help him hire Can Sun, who's going to jail. By the way, you guys don't know that name. That's the lawyer that was, that I wasn't my, what, I was in Hong Kong when FTX moved to the Bahamas. I was left behind, or Bermuda, wherever it was. I was left behind, like, I was like, fly, my pretty fly. However, looking back now, I will say, Sam clearly, from a very early on, knew that he was better than all of us. He had that arrogance, but you know what? I love arrogance. Arrogance can be really good. So I don't know, but now I look back and I'm like, yeah, well, he always thought he was better than all the rest of us and that the laws didn't apply to him. But they do apply to you. You may not be able to, you know, fulfill your obligations to the law, but they do apply to you. But he definitely had some questions that were strange, like, well, you know, why do we have to do that? Nobody cares about crypto. And I'm like, that doesn't matter that there, at that time, if you remember for Alameda, there were no rules about crypto at all, right? There's nothing in the law yet. But I was trying to get him to see, I don't care, you still have a company and company law applies because you have a company and there's a lot of laws that you need to, and accounting applies no matter what you're selling, I don't care. Accounting applies. And you are raising funds from investors. So all of that investment stupid law applies, right? But he didn't want to listen to me. He did though, he did. At the beginning with Alameda, he did. And then he hired the Hong Kong lawyer who's gone to jail as well. And we hated her because he was paying me a lot of money every month. And then she came in and was like, well, we don't need Erika and her team anymore, and just cut us off. So obviously we hated her very, very much. And I'm very pleased she's going to jail. But that's the only thing I can tell you there. With Three Arrows, the fund collapsed. So $16 billion-ish fund The fund collapsed because of Luna, right? Remember Terra and Luna and all the, I didn't do Terraform. No, we did not do that. But 3 arrows was bad enough. Okay, so $16 billion collapsed in the fund. And those two guys, Suju and Kyle, are not going to jail for that, okay? They're not, because they did everything right. Funds collapse all the time. So if you guys are putting your money into a fund, the risk is there. And we say very clearly in the risk factors, you got to read them. They're like master. I spend a lot of time writing risk factors where I'm like, on Tuesday, somebody could wear a pink shirt and the whole fund could collapse as a result. Okay, I'm like writing the most ludicrous risk factors, but as long as I've written them down, you knew them. And so you knew giving your money to them had this risk. So they're not going to jail for the fund. They are going to jail for lying, I think. Well, we haven't been able to find them yet. But they lied to 2 of their lenders. So they were heavily leveraged. And they had borrowed a lot of money. And they didn't have the money to pay back. And they should have just said, we're bankrupt. We don't have the money to pay you back. What can you do, right? We're bankrupt. Like, it's the company that's bankrupt, not Kyle and Sue personally. So they don't have to pay it back. The company has to pay it back. And if the company doesn't have enough money, then we'll just sell off the assets of the company, whatever's remaining, and try to give the lenders some percentage of their money back. That's how it should go. That's what they should have done. But they lied and got Gemini and a bunch of others to lend them like hundreds of thousands of dollars, no, millions of dollars, 70 million or something, after they knew they were bankrupt. And I think that was fear. I just think that was fear, and I did not see that coming. I was so pleased when 3 arrows collapsed because I was like, yes. And then CFTC called me, and unfortunately, they were digging into it, and they had recordings of them lying after the date of bankruptcy. I did not see it coming. I'm so sorry. Did not see it coming. I mean, they were assholes, but again, I don't mind working with assholes. You can be an asshole with integrity, right? Somehow, I think sometimes if you look at Elon Musk, when he first started out, apparently he was great to work for, and now he's an asshole, like for true, real, like he was always an asshole, but now he's really gone crazy. So maybe that just happens to people. Any other questions?
How long does it take to get PCD?
Sorry?
What's the average duration to get PCD across the globe?
BCD.
Patent Corporation Treaty.
Oh,
PCD patent already.
oh,
Filing is Malaysian. Yeah. File Malaysian, we have 1 year to file the basic PCD. Right? You elect the International Search Authority, and they can give you a report on your patent application within 3 months of PCT file. Right? PCT gives you 30 months. 30 months from the priority date of file. So in theory, that you can get all approved in countries or
no.
only PCT countries, which is probably 148 countries. But after the 30th month, then you need to file in countries. Yes, that's all national phase. PCT is international phase.
Yep, and it's, if you guys have patents, you must get a specialized patents lawyer, okay? Your IP law is very, very scary. Back when I was a lawyer at the law firm, my client was Viagra. And Viagra had lost its patent on the word Viagra and the shape of the pill in China because they had filed everywhere thinking that, if you've used the word Viagra and you've sold those pills, you therefore have a right to use that logo and the fundamentals of the pill and the patent and all that sort of stuff. In China, that's not true. It's first to file. It's not first to use, it's first to file. So some enterprising person just filed the patent, filed the logo, and took Viagra away from Viagra in China, which is 1.2 divided by 2 million men who wanted to use it. So yeah, I worked with Nike, Viagra, Marsh McLellan was another that got taken in. A lot of these American, in particular, firms, because I was working for an American law firm, of course, didn't realize that China would not support. So you really have to be careful. And there's a whole IP strategy that you have to do. And I didn't even talk about the banking strategy. There's a whole strategy to these things. Like, it's just crazy. But please speak to a specialist. Any other?
Addressing valuation gap.
Huh?
Addressing valuation gap for startups.
Oh, okay. So look, valuation, do you think it's a science or an art? No, it's just an art. Okay. Now, there are a lot of different ways to value a company. Okay. You need to do all of them. And your job is, should you choose to accept it, sorry, it's a joke for old people like me. Your job, should you choose to accept it, is to explain why different valuation methods would come up with a different valuation in the end. And so, again, it's just like, oh, no, I don't have my license yet. Again, don't lie, but explain it. So you've got to, when I see a valuation, I get really mean. I start digging into the numbers. Well, why do you think you're going to have 3 months of this kind of return? Why do you think this? Blah, 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 blah. Because I want to press and pressurize and see if those assumptions make sense. And I'm going to want you to work with me to make the assumptions fail. And then what's the worst case scenario, and what's the next worst case scenario, and blah, blah, blah. So always thinking about failure in your valuations is really, really important. But that's, you know, when you're talking to an investor, we know it's all just, don't worry about, I mean, again, if I can see that you have grit and integrity, okay, and that you're willing to, like, you know, listen a little bit, not too much, but a little bit, then, and you're an executor, then I don't really care about your valuation. The valuation is just going to determine how much percentage I get. And, you know, that's why tokenization was so great, because I don't want equity. My God, I don't want equity. I do not want equity in your country, in your companies. I want your tokens if you have them, or I want some kind of income stream, or I want something else if I can get away with it, not equity. Equity is really sticky, and it's annoying, and it takes a long time to do anything. Like, I don't really want it. And for you to actually go to IPO, I used to do IPOs for a living. My God, they're awful. Like, nobody in their right mind would want to do an IPO. And, or if you're going to do a trade sale, it's also horrible, and you're never going to make the money that you think you're going to make. So no, I want tokens. But so if there's a way to give money to your investor, such as getting a loan, even a convertible loan, but a loan rather than giving them equity, you should go that route. Because you may go 30x, but I only get a 10% coupon. But that's because I thought you were too risky. So I didn't take your equity, right? Or I didn't take your tokens. I was telling him before, I have a lot of failures where I refused to take tokens. I would be very, very rich right now, but I thought it was really stupid what they were doing, because I don't play computer games, and I think computer games are really stupid. So I didn't take tokens for Axie and Sandbox, and both of them, I would have gotten them at some ludicrously low price, like less than a penny, and Sandbox went to $79, and Axie went to 100 and something. I would be so rich, so very rich. And I didn't, because I didn't believe in them. So anyway, but the point is, yeah, equity is not, valuation's all about equity. If I can get it, if you cannot talk to me about your valuation, if it doesn't make sense to me, say, give me a loan then, right? Never give up. Never give up. Just say, give me a loan then, or your tokens. Okay, anything else? Yeah, okay.
So the first
first part, and then we can address this however it's fit. So the first part is that now that Trump is president of the state, right, actually where I'm going with this is that there's more of a favorable take to crypto, definitely. And there's a lot more chit chat around projects moving back to the West, moving back to the US, because adoption is better. And right now, probably it will be more favorable to set up a startup over there, right? Let's say, which is more crypto heavy. And then the second part to that is, do you think that that is true? And also, do you think that for startups outside of the States, outside of the West, do they still stand a chance to compete with the West?
Oh, yeah. Do not worry. So we're seeing the end of the United States of America. This is the end of America. I don't care how much Trump wants. He cannot change the basic legal structure of the United States. And the basic legal structure of the United States is based on all these court cases that we've had for the past, well, since 1930s. Okay, so that's, wow, almost 100 years. I'm really old. Anyway, because I used to just say 70 years. Now it's like 100 years of law that you cannot just overturn, okay? So one, it's a little bit too like, it's going to be great, Trump loves us, blah, 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 blah. I don't think that's true in all of its glory. One. Two, it never made sense, unless you were American, it never made sense to have an American company. Even Americans do not start up their companies in America once they're starting raising money. What is the secret? You go to BVI in Cayman Islands, and then you have an operating company in the United States. That's fine. And that's driven by tax. And it's driven, again, by me. I'm Canadian. Do I want to put my money into the United States of America, into a company that's sitting in Delaware? Delaware's got very low tax, Erika, you say. And I'm like, yeah, I don't fucking care about Delaware tax. What I care about is when that dividend comes out of the United States into my pocket, the Americans take 30% of it. Withholding tax, it's called. Fuck you. Okay, I'm never putting my money in the United States. Now, I can buy houses in the United States because the withholding tax has been reduced for Canadians to 15%. So I did buy houses in the United States because I thought 15% was fair, but 30% is not. Okay? So, no, I would never have put my money in the United States, but I really like to support, good projects. So please set yourself up a BVI or Cayman Islands and I'll put it in there. Why? Because I still have to pay tax. When I receive the money, I will pay tax, but there's no extra tax there. Okay? So one, just don't put your money into, if you guys are Malaysian, is there a tax treaty between Malaysia and the United States? I believe there is, which means you can get your withholding tax down to like 10%. Not bad, but still, why not just go to the Cayman Islands BVI? And why do you want to check? What if tomorrow Trump just fucking turns off all the treaties, which he's been threatening to do? He wants to invade my country. This guy is not sane. So no, just keep your money out of the United States. Give it to Cayman Islands and BVI, where it's stable, okay? And then you, as a startup in Malaysia, I don't want to put my money into Malaysia either, because Malaysia and Canada, well, we definitely have a tax treaty, because we're all former colonies of the fucking Brits. The only good thing is, as a result, we all have treaties, which is good. But again, I would rather you put your holding company, and I'll give you money at the BVI level. And then it's safe from all the shenanigans, politics, the coming war, right? It's all safe because nobody's going to bomb the BVI and the Cayman Islands. Okay? Why? There's like 2 people living there. Anyway, and then the Asia startups, absolutely we have a chance. Like, do not worry. I believe, for example, again, going back to my country, we have been friends with the United fucking States of America since when? How many treaties have we signed with them about free trade across that fucking border? And what has he done? He unilaterally terminated those treaties. Unilaterally. There's ways in those treaties of doing, if you're pissed off with me, we should go to arbitration and blah, 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 and talk about it. No, he's just like, I'm gonna put 30% tariffs on all of your goods. That's illegal under the treaty. So if he's not following treaties, what else is he gonna do? He says, oh, Canada should be the 51st state. So I wanna get all my money out of Canada because I don't know what's gonna happen there. I'm putting it in the BVI. And the Cayman Islands, okay? So my point being, I wouldn't worry about it too much. I think the chaos that he's creating is making some people very, very rich. And I wish what all of us should be doing here is dropping whatever you're doing right now and all of the tech stuff that you know and trying to figure out how to make it rich in this new financial environment. Because if we were smart, like working for Goldman Sachs, like a finance guy or something, we'd be so rich right now, because that's clearly what's happening. Somebody's making money off of this, but not me and not you, because we're still acting as if the world is like it was 4 months ago, and it's not. It's completely changed. So that, I think, is a big worry for all of us. I wish I were smarter about finance. I'm sure there's a way to make money. God damn it. What?
What is the average ROI for Series A?
The average, what? Average investment amount?
No, returns for Series A.
Oh, Series A? Okay. So obviously that's going to, completely depend. I'm an angel and a seed investor because you can get some serious returns for that, right? We're talking 10 to 30x. By the time you get to Series A, that's raising at least $50 million on a valuation of at least $50 to $100 million, okay? You have to have certain things in place, which unfortunately, because it's really expensive, is going to drag down all those returns quite a bit. So, seed A, I'm going to expect between 5x maybe. I did seed A to Animoca, and I'm supposed to be getting 5x. Right? I've gotten better. I've gotten like 7x. I've gotten what's much, much, much worse. But by the time that's why I like the seeds and the angels. The seeds and the angels are like, woohoo, okay? But the Series A, it's really bogged down, but that's why you like it. A lot of people only do Series A because B and C and whatever, because yes, I'm only going to go 2x or 3x, but I'm certain to get it. Whereas angel, I'm going to get 0. And so that's the trade-off, the risk reward trade-off always. Anything else? Anybody else other than him? Okay, good.
Nothing else, but the final comment is impossible not to overcome.
Yeah, good. You recognize it. I'm like, should you choose to? Anyway, I hope that it was at least got you thinking that don't be overwhelmed. Just have your idea, ignore the law, but have integrity, and just go forward and deal with it.
Yep. All right, thank you, Erika. So, any final questions for Erika? No? All right. Okay, I think today we have both speakers speak to us. We're very grateful for both of them. We are going to end here. There's still some food there. Please help yourself. All right, thank you. Please join our next event.